The wealthiest people in America play from a different tax playbook than the generic everyday W-2 tax paper. But the great thing is you can play from it too. Enter in the side hustle, which can unlock pieces to the tax code you probably never even heard of, and most people will never even learn exists. Hey guys, my name's Andrew D'Amico. I'm a CPA of 3 years. I'm a partner here at Ledgerly, alongside my partner in crime, Mike Abrahamian, also CPA of 5+ years, where we really focus on tax advisory service for our clients, bringing them tax saving strategies, helping them build asset protection, and ultimately lay the groundwork for generational wealth. If any of those 3 things speak to you, make sure you're subscribing to this channel to learn more from our weekly videos. Now let's bring it back and understand our topic at hand here, right? The side hustle. What is it? Why is it important? What are the benefits? And why, if you don't have one, why should you be racking your brain and trying to create one? So let's start very basic. What is a side hustle? I'm not talking to the everyday W-2 9-to-5 person. That's not true. It could be this person, but with the side hustle, they're making money outside of their day job, right? Maybe they're working when they go home at night, they're doing some consulting, or they're selling some things online. I don't know. Do you like knitting? Do you make paintings? Do you sell art? Do you sell baked goods? I don't know. There's numerous different products you could be selling online. That's what a side hustle is. You're making money for yourself. Maybe you're a freelancer. You could be doing some consulting, some one-on-one coaching. Maybe you're a former athlete. You're big in your community still where you grew up. You take in college athletes home for the summer and you're giving them private one-on-one coaching. I don't know. There's so many different possibilities when it comes to a side hustle. The point being, you're not on payroll and people are just giving you money for something, whether you're providing them a service or you're selling them a product. You might only be bringing in a couple $100 a year. Maybe it's a couple thousand. Maybe it's tens of thousands. I mean, it could be any different levels. But if you're getting money from someone, I don't care what amount it is, you have a side hustle, and that means you're a business owner. And to tie it back, you can play by the rules of the wealthy. A lot of what we're going to get into here, the regular, everyday W-2 person cannot take advantage of, and that's why we want to get into the side hustle discussion. We want to have one so we can ultimately benefit from it. And don't worry, if you don't have a side hustle now, that's fine. Keep listening because you're going to learn what you're missing out on. All right, so now let's pivot over to the whiteboard and let's get into the nitty gritty. First off, the difference between a W-2 and my side hustlers that we're talking about, right? I have a small business here. So at a high level, they're doing the same thing, but the order in which they do it is slightly different. So for my everyday W-2 people, you're earning income, but then you're paying taxes. Notice if you've ever had a day job before, whether you get paid weekly, bi-weekly, whatever the cadence is, on every pay stub, you're going to see your net take-home pay is less than what your annual salary prorated for that period is going to be. Why is that? Because they're withholding taxes on every paycheck for federal income taxes, for your state income taxes, for Social Security, Medicare, that FICA. It's all withheld on every pay stub. And then number 3, after those 2 are out the door, then you pay for your everyday expenses, right? Your rent or your mortgage. You got a car payment, groceries, electric bills, utilities, phone bills, other electronics, you name it, vacation. You name it, you got to pay for it with after-tax dollars. My side hustle friends, however, they're earning that same income first, but then they get to pay for some expenses. Now, all those ones I just listed, I am not saying you get to write off every single personal expense under the sun against your business income. No. That's run it back. That's not what I'm saying. Not what I'm saying. But if there's any business use associated with these expenses, we get to deduct it against the business. Think about it. Everybody has a phone nowadays. I imagine in today's day and age, whatever side hustle activity you're doing, you're probably going to use your phone for a piece of that business. Coordinating with clients, getting on Zoom calls, answering emails, things that you could all be doing from your phone, right? There's going to be business use attached to that, so we can deduct that against the business. And you can shift some other personal expenses over onto the business, but we'll get into that. Point being, you get to a bite at the apple before you get assessed and have to pay the tax. And that's where number 3 comes in, and then you pay the tax. And then not listed here is number 4, where you pay for the rest of your personal expenses. But I really just want to emphasize that shift between 2 and 3. That changes when you're a side hustler. But let's move along here. Let's get a clean sheet. And now let's go over pros and cons of being a side hustler. Maybe one of the greatest strategies with the side hustle, especially as it comes to generational wealth or just even saving for retirement, is a solo 401k. This 401k is going to be any sort of employer 401k or group 401k you're part of at your day job, because now you're contributing to it as both the employee and the employer. So you can funnel away a lot more money than if you were just at your day job. The limit's like $23,000 a year. Whereas if you're doing it through your business in the solo format, you can shuttle in like over $70K a year in 2025, which is incredibly powerful. And I don't even care if it's Roth or traditional. Sure, the employee side, those contributions, they're capped at that same $23,000. If it's Roth, you're not going to get a deduction for it. But the employer contribution, where the rest of those monies are getting contributed to the plan, Roth or traditional doesn't matter because it's an employee benefit. So it's going to get deducted against the business. So that's incredible. You're getting a deduction for it and you're building for your retirement. So we love the solo 401k. It beats the group 401k at work every day of the week and twice on Sundays. Another thing my side hustlers can do that you W-2 people can is pay your kids. Now, of course, you can pay your kids, but the side hustler can take a deduction for it against their business. And you get to shift some income from you as the parent, probably in a higher tax bracket than your 10-year-old son is. So you get a deduction for it, you pay the right amount, your kid doesn't have to file a tax return, doesn't have to pay tax on it, and then take it an even step further. We talk about building that generational wealth. Turn around and take that money that you just paid your kid for reasonable services in your business. Maybe they're a teenager. That's a key point to this strategy is there needs to be some sort of benefit that they're providing the business. It's janitorial services. They're a teenager. They know how to work social media. They're running your social media pages. Give them a reasonable salary. You take that money you paid them, you turn around, you fund a custodial Roth. And if you're consistent with those contributions, what that can turn into over, depending how young they are, before they ever take out of retirement, could realistically be 50 years. Could be greater than 50 years. The compounding effect of interest, that is going to be a fat Roth IRA. Kids will be set up for life. And then they turn around and do the same thing and continue passing on that generational wealth. But anyway, sure, you can fund a custodial Roth for your kids when you're just at a W-2 job, but you don't get that business write-off, and you don't get to reduce your taxable income as the parent running this side hustle business. Next piece, we're going to get more write-offs as a side hustler. Check out our other videos on accountable plans, but this is we're going to take credit and apply a business use percentage to things like our home office, auto reimbursement. What other expenses are we paying for out of pocket that have personal use that also have the business use? Electronics, laptops, iPads, second phones, the internet bill, right? If anything has a business use tied to it, we're going to get a piece of that and be able to write it off. Whereas W-2 guy, that is just all going to be paid for out of pocket. This next one's fun. Another strategy that we can supplement with our side hustle business is establishing a board of advisors. You see, I'll just put BOA here for short. But what that is, you take, anywhere from it's got to be reasonable, but we recommend 3 to 5 people, close family, whether it's your spouse, your parents, your kids if they're a certain age, close family friends. We're going to put them on our board of advisors, people that we trust, and we'll reach out to them during the year and get input on our business. We're going to put them on our board of advisors, and now we can go out and take a vacation, our annual meeting in, Miami, Florida. I like Miami. You can take everyone, go on a vacation to Miami, and we can write off a piece of that vacation as a genuine travel expense because you brought your board and there you held a meeting. Again, there's a few other nuances to it, but point being, this is another strategy that we could stack on top of the side hustle, and the person at the day job is not going to write off a single piece of their vacation. Next, we also have startup costs. So you can deduct up to $5,000 in startup costs in year one, once you start making money. And that's something that people don't even know that they have this head start at their disposal. Now, you can't go crazy and just go around forming up an LLC, saying you're starting a side hustle, and then just go and take that big vacation to Miami I was just talking about, and just funneling it all through this so-called business where you have no intent of generating profit. No, that's not what this is for. This is just saying that, hey, there's code section out there that all your startup costs before you begin making money, you can deduct up to $5,000 in year one, because the rule of thumb is you can't deduct anything before you start making a profit, but startup costs you may. If you get over a certain dollar amount, let's say you spent $50,000 in startup costs before you made a profit, it might start to phase out in that year one benefit, but ultimately you will receive that benefit. Now, onto our list of cons. So side hustles are great, but now you just have really a lot more homework that you have to do and make sure we're doing this right. Namely, number one is you need to separate your business and personal activity. The thing that we don't want to do when we're starting up operations is what's called pierce the corporate veil, because then you're going to lose any asset protection in any LLC you have for this side hustle business. So we need to make sure we're being diligent and keeping good records and really ensure we're keeping business over here and personal over here. Can't commingle. because then the IRS is going to say, hey, you didn't even respect your own business. What kind of operation you're running over there? That's not a road you want to go down, because you lose that asset protection. They can come after your personal assets. If anything were ever to go wrong, slip and falls in rental properties or just a lawsuit, malpractice, whatever, you name it, we don't want to go down that road. Keep them separate. Also, another con, where you refer back to that first slide on the differences between W-2 and the side hustler. Taxes, yes, they're assessed, you pay them last, but now it's on you to make estimated income tax payments on that income, right? You slide up here, you see how tax is number 3, whereas for the W-2 employee, it was getting withheld on a weekly or biweekly basis. So now the onus, the responsibility is on you. So if you're in an income tax state, and especially for the feds, the IRS, you need to send in those quarterly estimated income tax payments, like I said, on a quarterly basis. It's up to you. As operating your own business now, you're going to have a lot more admin functions that you're going to have to take care of. Just think about it. You got to coordinate with clients, or if you're selling things online. My point being, okay, you're running a business now, but especially early on, you are going to wear all of the hats in your businesses. So you're going to be setting up the entity. You're going to be carrying out the operations of said entity. You're going to be your own bookkeeper, your own accountant, your own advertising and marketer, social media manager, right? You're going to be all these things. So there's going to be a lot of admin work, at least early on when you're on the DIY strategy of things. You're doing everything yourself. Could be a lot of work. Also, I alluded to it previously, but we want to make sure we're maintaining our asset protection. We probably want to get some insurance. I don't care what field or industry or service you're providing or doing, whatever it is, I'm sure there's going to be an insurance that's going to be able to help you out and kind of protect yourself. So again, a little more homework. You want to make sure you take care of that. And mention the LLC. You can certainly start side hustle operations without an LLC. I would strongly advise against it, because you want to make sure you're setting up yourself for success, and you don't want anything to come back and bite you in the rear end months down the line, years down the line. We're going to want to get an LLC in place, and then so we can have that asset protection. But with an LLC, there's maintenance that you need to do with it, right? So we're going to have to renew our state filing with wherever we're operating every single year. We're going to need to maintain company minutes. If we have that board of advisors, we need to have board of advisors minutes, right? We're going to need to have a corporate book that goes along with the LLC that's going to make sure we're operating as an LLC. It's regarded as an entity. It's separate from our personal, and we are protected. So guys, no matter where you are in your side hustle process, I highly encourage you to get a consultation with a tax advisor. I'd recommend Ledgerly, but I'll leave that up to you. Just get in touch with a tax advisor, because they're going to come to you with strategies on how to maximize the side hustle and bring you action items. And they're going to walk you through it, and you're going to knock it out of the park. If you'd like some other resources, you're just starting up your side hustle or about to, I highly encourage you check out our playlist on setting up an LLC. It's a 3-part series, our LLC setup guide. Please, if you found this useful, give this video a like. Comment your thoughts or questions. We'd be happy to respond back to you. And subscribe to this channel for more tax advisory tips. Thanks, guys.